What's going on, traders? Welcome back to day 24 of 25 days of trading. I know it's a little sad. We're almost at the end of the series, but I appreciate you tuning in to every video so far. And if you haven't, make sure you subscribe and go back and watch those whenever you get the chance over this little holiday break we have before we ramp it back up in the new year. Every morning at 11 a.m. for now, I guess, one more video. Tomorrow morning, Christmas morning. You could maybe not watch it live. Maybe open your gifts first, hang with some family. I'll understand if you watch it later in the evening. If you're watching this later on, I appreciate you tuning in. But in today's video, I want to talk about FOMC week. We'll call it that. But really, just this whole video is walking through the whole week of charts of how I saw it and where I thought the best plays were. Because I know a lot of people were getting chopped up specifically on FOMC day. So we definitely want to take a look at that. But even just in general of my breakdown of if I was sitting here by myself, how would I go back and rewatch the entire week? Where were the best plays? Where were the inducements? Where did the amateurs probably trade it? All that fun stuff. So strap in, put your phones down, let's take some notes and look at some markups here. But first things first, a lot of this is going around Twitter. My trading view sent me 2100 days, 58. That's almost 6 years. It pretty much is 6 years. So don't let this young, pretty handsome face fool you, or this jacket, we're not even going to discuss that, fool you that I've been doing this for 6 years, that I may know a thing or two. I may have seen a few cycles of bullish, bearish, chop, a lot of strategy development, a lot of losses, a lot of failures. I've seen a thing or two from other traders as well, and I've learned from them. They've learned from me. A lot of experience in those 6 years, all developed to where we are today. So, without further ado, what would someone with 6 years of experience see on the charts? Let's just go from Monday to Friday. First things first, we took the trade on ASFX TV a little out of my characteristic. I launched it pretty early before the range was even really set. Not my cup of tea, but maybe Austin induced me a little bit. But regardless, the plays the rest of the day should have been quite easy to find longs off of as you're respecting this opening range high. You're above New York VWAP. Bullish is the trend. That the one thing I just want to keep an eye on for this trade, the long should be clear later on. But first off, not getting induced into these shorts. First, we're not chasing momentum on a short outside of the opening range low. That's one that if it could have defended this New York and maybe came back out the second time, maybe you could offer me some shorts. But for this one, let's look at the left. The 15-minute. All that move down is just pinning that daily VWAP on a morning that started off very clearly bullish. So we're still leaning longs that those are the most probable plays. So we're still above the daily. This just looks like a place where we want to build a higher low. So it's trapping a bunch of shorts and then continues back in trend. Simple as that. That was Monday. You should have been looking for longs on break of high a day, a bounce off opening range high, anything like that, because that's the trend, very clearly bullish. Now let's leave that New York on, because when we go to Tuesday now, that New York VWAP is going to become a yesterday's New York, right? So now we can move it over here, get rid of the daily VWAP on the electronic, and let's start that process over. Here on the 15-minute for Tuesday, let's put on a daily VWAP. If you've seen the previous videos, I show you where I put all my VWAPs, what they are, as well as all these key levels. But here's our daily VWAP in black. Let's unsync that on the 2-minute here. And then let's put on a yesterday's New York at 9:30. Turn that dark blue. So now on Tuesday's 1-minute, right above my head here, the open range pretty choppy. You get a break below, break back above. Not super clean, but there was a few people, if we just put on like a today's New York VWAP, which is a good one to put on. Obviously, we always have that. Maybe people were looking for longs off an open range high here, over here, or maybe even a bounce off New York later on in the afternoon as buyers are still trying to keep us propped up. But again, let's look at the 15-minute. Since the changeover, a lot of VWAPs going on, we're still building lower highs. We're still, yes, we're above today's daily VWAP. Let's get rid of the New York to clear it up. We're above today's intraday daily up in here. But what are we still potentially forming as long as we're below this blue yesterday's New York? We're still making a lower high on a day that's very bearish. We actually took out a previous day's low, which if you know that, when we take out a previous day's low down here, there's great odds that day ends bearish. So any long I'm putting on is kind of fighting that probability. But even just simply, the trend is also moving down. Structure is moving down since overnight. We're below yesterday's New York. I can't get sucked into a couple minutes, or even, it is not even a couple minutes. It's like an hour or so above the daily here. That I think if it could pop above yesterday's New York and then we can retest, and then we can find some longs, as well as taking out that previous structure. Then maybe you can convince me on some shorts. But as far as I'm concerned, if we just remove this daily, just for easy terms, and let's remove all VWAPs. Let's make it naked. What's price action still doing today? Still making lower highs and lower lows. So don't get induced into longs, even though it looks maybe those are still more in play here on the 1 minute on the right side. But realistically, it's also just very choppy. So it's nothing really super clean. If anything, maybe the play was to short it later on a lower day break back outside the range, because now you're seeing the 15-minute on the left back below the daily. So if you could have been patient, maybe you find the in-trend move later on once it was finally ready to move. So there's Tuesday. We're keeping up, looking good, feeling good, taking some notes, understanding everything. Now that takes us to FOMC day. Oh, FOMC. Quite the move down. Obviously, I got really no notes on that, other than that's a big-ass bar. But let's put on our daily view up. They're in black. So on the stream side of things, when we were taking trades at the open, longs were definitely the way. It just did nothing but move higher. There was no pullback. If I put on a New York view up here, you can see just straight up. Zero pullback for Evan to get in on, because I'm not taking these overextended moves, especially after we had a strong move down on the 15 pre-market and then right back up at the open. That's a lot of gas used on a day of normally not very trendy on FOMC day, that the professionals really just take the day off because it's very, very choppy. That just to look at the trades here, I really do like this bounce off New York. Technicals are saying that's a beautiful long. It's straight out of my Futures 2.0 course on ASFX TV. That buyers are defending a key level. Let's continue the trend back higher. But the key word I just mentioned there was continue the trend. I don't believe, personally, again, going with my 6 years of experience, I don't believe we're going to probably have strong trend today on FOMC day, being that I've seen plenty of them. I don't know if we're going to get a new high and then pull back and another new high. I don't know if we're going to trend today. That's just not normally what we do. So although the technicals may look really primed to go higher, I was a little weary that we might just die and fizzle off and run out of gas until the 2 o'clock releases, which is exactly what we did. So that was just an experience thing, because you can't really teach that on the technical side. That's just knowing and having experience at the desk for plenty of FOMC and plenty of these news events. But you definitely could have made money long at the open. I mean, that thing ripped. That, I think, the only way to play it when you're indecisive on if there's going to be enough gas to move, rather than wait for a high day VWAP break up here. You want to try to have the best price as possible. If you think it's going to turn into a range, you want to try to have price, obviously, as low as possible at the bottom of the range. If this is going to be our top, you're saying, and this is going to be our low, when you want to try to buy the bounce off of it, and then to the bottom, and then bend to the top, and then the bottom, and then the top. So rather than chasing breakouts on a rangy day where you don't think there's going to be gas, you should be really looking for potential range plays. All right, that's just my opinion and what I see work best, of not chasing breakouts, because it is a valid signal and it looks good. But on this given day, breakouts just probably aren't more favorable or going to work as good. So now let's go to Thursday. Following FOMC, good Lord, I got to keep scrolling. That move is down there. Now we're here on the 1 minute. I don't even need to turn on yesterday's New York. It's nowhere near. It's well above us. But same thing here on the 1 minute. Now this is Thursday. Let's put on a New York VWAP. We could even turn on the opening range low is, boom, open range low, opening range high. Now, structure, this retest, not chasing the first breakout, taking the second one, you can make a nice little move. Where is the price to sell it at today? Because we're clearly bearish with lower highs and lower lows below the New York VWAP. The opening range low. The opening range low. I went over in a few other videos. It's also mentioned in my course. My least favorite trade is taking 5 minutes above the New York for the first time today. Okay, finally, buyers are back in. The trend is still falling. Buyers are not in. They're inducing you to get in. And same thing on a higher time frame. They're not going to look like they were ever in. Because if you're looking over here on the left, get rid of some of these lines. We're getting busy over here. We're still falling on top. Lower highs and lower lows from that higher day VWAP. Now this one is a little tricky, because if you put on the daily like we've been looking at, we are kind of above it, back below it, above it, back below it. It's just super, super choppy. So another thing, just experience-wise, would be looking at that giant move from FOMC. Do you think we're going to retrace the entire thing? Now, of course, you could find longs that don't need to go all the way up there to make money. That's not what I'm saying at all. But do we think we're going to just see buyers completely recover and move us higher? Where obviously, if you put on a yesterday's New York, you're well below that still. So sellers are still in control. You had a bearish day yesterday. It's an inside bar day. I'm just looking for clear trend, and we're just not really seeing it to the upside. But maybe the downside's a little too choppy for you as well, being that you are, since the changeover, building higher lows, which is exactly why I was flat for most part of the day, because I was really, I could kind of see the longs. If buyers do get us back above this daily and push us, that would make sense. But I'm still kind of seeing this maybe being a lower high to make that lower low, which is what we made on Friday, which we'll get to in a second. But just a tough day overall. But when you look at the structure, it certainly wasn't telling you to buy it. If you just ride the structure lower, trying to get a good price off a key level, which I show you in the course, like I said, off an open range low, an initial balance low, the New York VWAP, you can find nice lower day breaks as well, following those retests right around here. Right, if I put on a lower day VWAP here, you can see it gets taken out, sellers are back in. Right, just nice and clean trend lower, not getting induced into longs after that giant FOMC move. Now, on our final day here, let's go to Friday. Last day of the week, another rip. 0-0 pullback for me to get involved with. And a tricky day because, similar to what I said against one of the other markups, we don't normally take out a yesterday's low and end the day bullish. Well, we certainly did here on Friday. Very much so. Just a straight rip higher, following the news pre-market into the open, and then it topped out about 12:30. Now, one thing I would say, with the longs, I think it's obviously risky to even long it up here. In hindsight, no, it's not, because it kept going higher. But I think just seeing it way up here is very tough to long, because it's just so high up. All this gray space, just no pullback. If I buy it up there and it just gives a healthy breath and then continues higher, I'm going to feel so foolish of having to long that right into it. But the key lesson on this one was, let's take it back to the 15-minute and just bear with me now as you don't need to see this part zoomed in. December 6th, our all-time high. I also mentioned this in my course as a key view up that I use. I'll turn that one green. Now let's go back to the chart. Scrolling. Look at that. Right off it. Let's take it to the 1 minute. So the long you're taking way up here is into an all-time high VWAP, whereas a key VWAP to see either sellers defend it or buyers break us above. But you should not be trading it right when you're at it. You should be trading to it or away from it. Never right at it, because then this will happen. You'll long right into it, hoping buyers break us above because they've been so strong, and then you get smacked. Right? Just wait another 30 minutes, see if they could break it, and then long it over there. Because now you're also saying you're bouncing off a key VWAP as like your support, rather than saying these trades are off nothing. You have no support of like, I'm bouncing off a key level, this might want to bounce from here. This thing's just ripping higher. But if you could have found a break and retest, now you're at least trading off a key VWAP. Same thing if anyone that shorted it, they're shorting it off a key level. So yeah, you have some good reason to think it might bounce from there or bounce and break higher. So either way, it's going to bounce somewhere or consolidate for a while. But also same thing with using so much gas at the open, coming in at, let's say, 2:30 on a Friday right before Christmas. If you took a high day break here, it's not hindsight bias. I promise you. It's a gut thing, maybe. Maybe it's just my gut. I'm confusing it with something else. That if you think we're going to make a new high a day above an all-time high VWAP on a Friday that was FOMC, Christmas is in a few days, we use so much gas at the open, and you think we're going to make a new high here, it just seems so unlikely. That if you're long it, expecting another push higher to win on another long, it's just asking for so much. A little bit of greediness or unrealistic expectations, I should say. So it was easy to avoid the long over here, in my opinion, just also late in the day on a Friday, get off the desk. But that's how I viewed this week. There's definitely some clean trades in it, whether it was long or short. A very interesting Wednesday with the FOMC, just a giant move down. But I think using that 1 minute Pairing it with that 15 minutes still, like I said, in this 25-day series, I have videos on my key VWAPs, my key levels. Check that one out. As well as how I use that 15 minutes to help me avoid potential bad trades, like trading into a key VWAP and trading away from it in my favor and riding that trend, getting a better vision of that bigger picture rather than just zoomed in on the 1 minute. Right, so definitely go watch those videos. And like I said, if you're watching this later or right when I uploaded it, I appreciate you guys tuning in. Have a great holiday. Have a great Christmas. Enjoy your break. We'll meet up again in the new year. We're all going to crush our goals. We're going to take this momentum with us into the new year. But yeah, I really, really appreciate you guys tuning into this entire series. If you have, you're a true, real one. I really do appreciate it. And if you haven't, I still appreciate you too for tuning into this one and any future ones that you do. Make sure you subscribe so you don't miss any future ones. Last thing I'll say is obviously Merry Christmas. But if you use code Xmas, a little gift for you, you can get 25% off ASFX TV where you can watch the streams and the courses and obviously more content like this as I live stream. Every New York Open, you'll see me say things like this in real time, ask me questions, get feedback on your trades, and most importantly, we'll take trades together and make some money, take some payouts in the new year. All right? So I appreciate you guys again. Happy holidays. Merry Christmas. Appreciate you guys. I'll see you on the desk tomorrow morning. Final one.